Greetings and welcome to the March 2025 Federal Student Aid webinar entitled Consequences of Missed Federal Student Loan Payments. My name is Tanika Carter, and I'm excited to be here to help you along your repayment journey. Let's go ahead and get started as we have a lot to cover today. So first things first, we want to be aware that many of you are joining because you are looking for some updates or some clarification on a few things. So let's start with the federal court actions. The federal court, if you're not aware, the federal court has issued an injunction that has prevented the Department of Education from implementing a repayment plan called SAVE, also known as Saving on a Valuable Education Plan. This also impacted other parts of other income-driven repayment plans. And therefore, the online IDR application was removed from the website. However, as of Wednesday of this week, the IDR application is now available. The revised online IDR application is now available, and you can find it at StudentAid.gov/IDR. Now, this IDR application only allows for borrowers to apply for only 3 repayment plans: IBR, which stands for income-based repayment, ICR, which stands for income contingent repayment, and PAY, also known as pay as you earn. Now, the SAVE plan still remains unavailable. It's also important to note that the loan consolidation application is also now available. Now, these changes also may have impacted recertification. As a refresher, all IDR plans take into account your income size and family size. So therefore, your calculations are made based on those particular factors to come up with your monthly payment. Now, recertification is usually an annual basis, and all because the application may have been removed during the time you were required to recertify, you may not have been able to do so. So if you have submitted an IDR application for recertification and it was processed, there is nothing that you need to do. However, if you somehow missed a deadline or the application was not available during the time of your recertification deadline, then we ask that you please reapply using the IDR application, once again, that you can find at StudentAid.gov/IDR. To all borrowers who were enrolled in SAVE, I know that you have lots of questions and you're looking for updates. Well, all updates to the injunction by the federal court, what it means for you, and all your frequently asked questions can be found on the website that you see on the screen, StudentAid.gov/court actions. All updates will be placed there for your convenience. Now, this particular webinar is for all borrowers. To be informed, if you in case happen to be at risk of missing a payment or you are currently missing payments. So I encourage you to stay so that we can learn together about what you can do and your options. So let's begin here. So today we're going to learn what happens when you miss payments. What are your options that you have if you can't afford the payment that you have, and ways to keep payments on time. We will also end with a knowledge check just to make sure we're all clear, and as always, leave some additional resources. Please note that you can ask questions in the chat. I cannot promise you that we will get through all the questions today. However, by you putting your questions in the chat, I will promise that we will pass that information on so that we can better improve our communications to you. Also note that this webinar will be recorded and it will be available tomorrow at noon on our FSA Outreach YouTube channel. Our outreach YouTube channel is at FSA Outreach. So please share with family and friends, or if you would like a refresher of today's webinar, you can be able to see that tomorrow at noon. Also, if you would like a copy of the PowerPoint slides that are going to be on today, please note that there will be a link in the description of that recorded video, and I've also just posted a link for you to request the PDF slides of this presentation. Well, I think we're all ready. Let's begin. So what happens when you miss payments? Let's talk a little bit about that. I'm going to enlarge my screen here so that way you all can see. And I'm going to take me off the screen so, you don't need to see me, right? So I want you to think of this as 4 phases of missed payments. The first phase happens after 1 day that you have missed the due date of your monthly payment. Your due date is different and it's all going to be based on when you've taken out your loan. So please look at your loan servicer bill, or you can go to StudentAid.gov and look on your dashboard so you can see all information about when your due date is. You are considered past due, or what we will call delinquent, when you have missed that deadline 1 day after the due date was due. On your second phase, 90 days later, you are now still considered delinquent. However, it will now be reported to 3 national credit bureaus that will and may impact your credit ratings on your credit score. Then phase 3, if you still have not made any payments or any progress, or have not called your loan servicer to make an arrangement, then at 270 days late, you will now go into what is called default. Default is when we start to have a lot of the consequences start to appear. And lastly, our fourth phase. If you still have not made contact or have not made a payment towards your missed payment due date, then there are some serious consequences with defaulting starting at 360 days. Please note that based on your loan type, you may experience some of these serious consequences earlier between 270 and 360 days. Let's talk a little bit more about what those consequences may be. So one of those sure ways that you will start to experience some of these consequences is around that 270 days, which impacts your loss of eligibility for certain benefits. That includes being able to have access to federal student aid and also being eligible for public service loan forgiveness. After 360 days of no payments, you will also no longer be able to receive or be connected as a status for deferment or forbearance. Now, if you're not sure what deferment and forbearance is, this basically means that your payments are temporarily postponed and that you may also be able to reduce your loan payment as well. So you will lose the ability to choose a repayment plan starting at that 360 days. So this is why we want to have this webinar today, to make sure that you're aware so that you can start to make some progress into your repayment, so that way you're not experiencing these consequences. Also, very important things to note: at 360 days, your full unpaid balance will become due, and any interest that's owed becomes due immediately. So instead of you having to owe what was past due, now the full unpaid balance will then be due. And also, the reporting of your credit score or the impact on your credit rating will be impacted as well. There are some additional resources or different there are some additional consequences, excuse me, that you may also experience. After 360 days of no payment, you also can be impacted by tax refunds and any federal benefits being withheld. This is usually called a treasury offset. You may also be impacted by wage garnishment, where your employer will be required to withhold a portion of your pay and send it to cover the payments for your loan. And you also may be impacted by some additional fees. Let's say your court charges, any collection fees, any attorney fees may be added on to your balance. So as you can see, we want to make sure that you are aware of these consequences, but most importantly, we want to provide you options in case you are at risk or if you feel like you are currently in a missed payment period. So let's talk about some options to get out of default. So, as we said, one of the consequences is that your full payment will be due. So, one of the clear ways to get out of default is to pay the full amount of your unpaid balance. Now, you're probably thinking there is no way that is possible, Tanika, and that might be true for some of you. So, there are two other ways that you can get out of default. One is called our loan rehabilitation program. And the second is to have your loans consolidated. Now, there are limitations to both of these options. So I encourage you to please go to studentaid.gov/n-default and be able to review all of the pros and cons and all of the things that are related to both of these options to make sure you're making the best option for you. Now, let's talk about some options if you can't afford your payments. Maybe you are currently in delinquency, or maybe you're close to that 270 days and you're trying to figure out, "Well, listen, I'm just trying to manage my payments at this point. What can I do to make them more affordable?" Well, I'm glad you asked. There are several different options for you if you find that you are this type of borrower. The first is our income-based repayment plan. As I noted at the beginning of this webinar, the application for IDR is now available, and therefore you will be able to apply for an income-based repayment plan. Now, what makes this such a viable option? Well, this might have the opportunity to lower your monthly payment, and it only has a 10% discretionary income if you borrowed after July 1st of 2014, excuse me. Your monthly payments will never be more than it would be for a 10-year standard repayment plan. So if this sounds like something you're interested in, please, again, I encourage you to look into the more into details and to apply using the now available IDR application. You also have total and permanent disability discharge. Now, many of you might have experienced a disability, whether it be physical or mental, that has severely limited your ability to work now or in the future. So you might qualify to be discharged of your student loans. So I encourage you to look at this option if that sounds like you. We also still have our public service loan forgiveness option, which allows for those who work full-time for a government or a nonprofit organization and are also making 120 qualifying payments at the same times, which could be equivalent to 10 years, then you could be eligible for public service loan forgiveness. So this option is still available for you to consider. And we also have our school-related discharge. Now, if your school has closed, here's the point here, while you were enrolled, or soon after you withdrew from that institution, then you might be eligible for a school discharge as well. Now, if those options don't seem like a viable option for you, you're saying, I don't fit any of these and I'm not quite sure if IBR is right for me. Well, we do have some other options as well. Let's talk about those. Forbearance and deferment. So let's say you were just like, I have a short-term financial bind or hardship right now, and I just want to temporarily suspend my payments. I don't want to create a new repayment plan. I just need a little bit more time in order for me to start making back my payments. If that sounds like you, then you might be eligible for a deferment or a forbearance. Now, it's important to note that in most cases, your interest will continue to accrue during this period. So you want to look at your loan balance and you want to consider that with your interest accruement. Now, if you are pursuing a PSLF, if you are pursuing public service loan forgiveness, it is also important to note that periods of deferment and most periods of forbearance do not count towards the requirements for PSLF. So although you might have made 120 payments, if they included a deferment or forbearance period, those periods will not count, and therefore you will need to consider that as well. Now, on the right hand of the screen, there are some examples of what qualifies for deferment or what qualifies for forbearance, just so you get a general idea. You might qualify for deferment if you're undergoing cancer treatment, for example, or if you are performing in a qualifying military service, or if you have unemployment as well. Some examples to qualify for forbearance might be that you have some financial difficulties or have some unexpected expenses, such as medical expenses, to consider, or you are serving in the National Guard. It is important to consider all of your options before deciding on what to do. Now, earlier I talked about loan consolidation application now being available. And if you're not familiar with loan consolidation, let's talk a little bit more about it here. If you have more than one federal student loan, you can consolidate, which means to combine them into one direct consolidation loan. This means that you'll get one monthly bill. This also means that they can lower your monthly payment and it's giving you also more time to repay your loan as well. It will also grant you the ability to be eligible for forgiveness options such as PSLF. Now, there are some disadvantages, so we want to be upfront with those and talk about them here. If you have a higher total amount paid over the life, which means because you're taking longer to pay for your loan, then that means the interest is also accruing, which means that you most likely will pay more over the period of your loan. You also should be aware that outstanding interest. So if you have unpaid interest currently, then any outstanding interest or unpaid interest will be added to the principal of the new loan that you're creating. And of course, if you are a Perkins loan borrower, there are some other benefits that you might want to consider before selecting this as an option, meaning that you might not be able to have cancellation if you were eligible for that. If you are considering student loan consolidation, I encourage you to please visit StudentAid.gov/consolidation. So let's talk about ways to keep payments on time. How can I keep my payments on time and avoid all of these consequences that you're talking about? The first tip that we want to provide for you is to know your loan servicer. Now, many of you have had a change of your loan servicer and you might not be aware of who that might be, or you're not quite sure in how to contact your current loan servicer. We encourage you to log into your StudentAid.gov account, and there you will find information about who your loan servicer is and best ways on how to contact them. Now, your loan servicer is key to this entire repayment process because they are the ones that will provide you information on repayment options and assist you with any other tasks related to your student loan. Get this, at no additional cost to you. So if you're having trouble making payments and you're concerned about the status of your student loans, your loan servicer is the perfect opportunity to call. So again, please go to your dashboard on StudentAid.gov to find out who your loan servicer is. There will be a section called My Loan Servicers where you can click on that and find that information. If you're having difficulties finding that, then please make sure you give us a call at 1-800-433-3243. Again, that number is 1-800-433-3243. Let's talk about some additional tips. One, you can sign up for auto pay. Now, before you close this webinar, you're probably thinking, auto pay? I'm having trouble with my payment now. But when you get into a more affordable repayment plan, this might be a very good option for you. And there are benefits that I want to make sure that we discuss. So one, this automatically deducts your payments from your account that you give us permission to do so. So that way you don't have to worry about missing your due date any longer. You also will get a discount. Yes, I said discount every month. And that is 0.25% less in interest each month when you sign up for autopay. And if at any time you're saying, I know I'm not going to be able to make that payment, I know that I have other things pop up and I really don't want them to take them out of my account, you can contact your loan servicer to pause your auto payment for that month or to set up a custom payment amount as well. So these are some great options for you. I want to make sure that we are being really intentional on this webinar here because many of you might not have signed into your StudentAid.gov account and you're probably wondering, okay, once I get in there, what should I be looking for? Well, this is a screenshot of what you should see. There are going to be 3 different sections on your dashboard. You have your My Aid section, which is going to give you a grand total of all of your loans and your grant amount that you have received. You'll also have a My Activity section. So if you're wondering, did I submit an IDR application? Did I submit a public service loan forgiveness application? Are there any actions that I'm missing? I haven't heard anything. Should I be doing something? This is the most accurate opportunity for you to get that information. And then also, if you have servicer information that you need, if you want to get a quick snapshot of your student loan, who your loan servicer is, and when that due date is, you will be able to see that also on your dashboard. Now, you also will be able to see your loan breakdown as well. So here you'll be able to see any of your loan details, which means the interest rate. You'll be able to see when your loan was dated. You'll be able to see the status of your loan, if it's in repayment or if it's in a default. You will also be able to see when your next payment is due and your total balance as well. So all of that you can find under your StudentAid.gov dashboard. So how are we feeling? Well, we're going to find out just now. We're going to do a knowledge check here, and I want to see just a little bit about your answers. So you can drop them into the chat just so we can cover and make sure that we're clear on what you can do. So question number 1, this is a true or false. Switching to an income-based repayment plan, student loan forgiveness, and deferment or forbearance are all options that can help to mitigate any struggling to afford your monthly student loan payments. Is this true or false? Let's see what you guys have to say. Is it true or is it false? Okay, we've got a great amount of answers. Great, excellent. So it is true. These are all options that you can take. Again, I encourage you to go to each one of these links that you see at the bottom of your screen here so you can make sure that you're finding more information about how you can be viable for these options. Let's go to question number 2. This question is also a true or false. Your federal student loans go into default after 1 day of being late on your monthly payment. Is this true or is it false? Okay, good. Yay, you guys are listening to me. Excellent. The answer is false. Your loans are considered delinquent. They are delinquent, not in default. You will not get into default until 270 days past your due date in order for it to have a default status. You will be in delinquency 1 day after you're late on your monthly payment. So please know that you still have time between your missed billing date 1 day all the way up to 270 days. What should you be doing during those 270 days? You should be reviewing to see if you can afford that payment. You should even attempt, if you can't make the full payment, even starting to make some small payments towards it. Or you can also contact your loan servicer to figure out what are your options for a repayment plan, what are your options for either a deferment or forbearance if you're having financial hardship. All of those options are true between day 1 and day 269. Okay, let's go on to question number 3. Which of the following is not a consequence of defaulting on your student loan? Is it A, wage garnishment, B, no impact on your credit score, C, lose the ability to choose a repayment plan, or is it D, you may be charged collection fees? Okay, let's see. What do you think? Is it A, B, C, or D? What is not a consequence on defaulting on your student loans? All right, let's see what the answer is. The answer is B, no impact on your credit score. In fact, there will be impact on your credit score. Okay, so defaulting on your student loans can negatively impact your credit score. And you really want to pay attention to this because it can impact some other goals that you might have, such as purchasing a car or a house or getting a credit card, any of the following. So we want to make sure that you're aware of that. So now let's talking about some additional resources as we start to conclude here and prepare for question and answer. So here are some helpful resources to consider while you're going through your repayment journey. So you want to compare your student loan payments with our student loan calculator article. So once that becomes available, you will be able to have that. You'll also have your loan simulator, which predicts what your repayment might be for your monthly payment plans on your student loans. You also have the ability to talk about, if I'm new to this whole thing, maybe you have just graduated and you're starting to prepare or become into that repayment status, and you want to just get, the basics on student loans and repaying them. I encourage you to go to our Repaying Student Loans 101 page. You also will be able to see our avoiding default pages and our delinquency pages as well. Please note that you can follow us all over social media. Yes, we are there, we are present, and we want to make sure that we are assisting you and hearing from you so that we know how to best improve our communications for you, to provide clarity during this time, and also to assist you on where you should go considering your repayment journey.